The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, the wheat market did its best to soar higher into the weekend, while everything else kind of a mixed bag heading into the weekend. How did the market shape up on Friday the 13th? Did we see any spookiness and surprises happening? Not really, but plenty for us to talk about as the market's headed into the weekend. Joining us for a conversation, it's good to have him back with us. Bryan Irey with Crossroads Coop is joining us here today. Bryan, it is great to connect with you again, sir. How are you?
I am well. Thanks for having me again, Jesse. I really appreciate it.
Well, let's take a look at this grain and oilseed trade to start. And as I mentioned, the wheat market kind of the high flyer into the weekend on Friday. A few different things here. I know some drought concerns in U.S. winter wheat country. A little over 50% of the winter wheat area listed as in some sort of drought. We have dryness concerns in the Black Sea and Russia. We had the WASDE numbers that were a little interesting on the global side of the balance sheet, I would say. But all in all, just felt like the wheat market decided to put a little premium in here into the weekend. What's your thoughts in that wheat market to start, Bryan?
You know, I think everything that you touched on, there are some fundamentals out there that are starting to build a friendly tone. And I think the dryness is a big part of that. I know in our part of the world, we have a lot of folks that are holding off on beginning to plant wheat just because it's not a good situation moisture wise. And I think in most areas we've had out in this part of the world, we had some late August rains that are starting to leach away a tad bit. And if we could get a half inch to an inch of rain, it would make all the difference in the world. But Kansas doesn't plant for a while, and it's been dry down there again as well. The situation in Ukraine and Russia has been interesting all summer. I mean, they vacillated a little bit on what wheat production looks like there, but looks like a good part of the Ukraine crop may go for feed wheat. And Russia is still obviously the main supplier to the world at this juncture, and it's just a function of how much wheat that they're going to have to export. But some strong fundamentals there, or stronger fundamentals. I think the big thing that we have going on is probably just an exodus of funds from those short positions. I mean, they have maintained those for some time. And I think yesterday was probably confirmation to the funds in maybe all three of the major grains that there just isn't a good reason for them to be this short much longer. And I think that's probably where we're getting some of the support in the wheat futures today. I know the producers out here are using the opportunity to price some wheat today, which is certainly a good decision.
Well, and I think about that too, and you mentioned the funds, and that might be a great point for us to highlight here a little bit. It's kind of looking like they're sneakily maybe covering some of those short positions in commodities, whether it's wheat, corn. We've seen it in soybeans. Cotton, I know, has had a fairly good week, although it was down a bit on Friday. You know, things like that. It just feels like, to your point, a lot of fund traders are saying, okay, maybe with all this Federal Reserve business and inflation play and more over in the macro markets, maybe we're going to either move some money to the sidelines or put some money into commodities, which looks to be a little bit of a safer haven right now. Would you agree with that?
I would totally agree with that. In fact, I used that same analysis with a couple of producers that I talked to today, and I think it's an interesting situation because most fund managers are incentivized on closed positions only, and I think closing out here in a time where maybe there just isn't a good reason, as I mentioned earlier, for them to be short any longer is beginning to make some sense. And whether they begin to get long in commodities or whether they reduce the short position that they have on currently, it just feels like that's what they're doing and where we're headed here for a minute. And I think the risk is that these rallies could tend to be very short-lived for that reason, because I don't know who's going to buy the commodities market once they are gone, unless they do start to get long a little bit.
Well, and I think about this, something we were discussing before we went on the air, the position of the farmer, the producer right now. A lot of folks very undersold in grains in particular, whether we're talking corn, soybeans, wheat, you name it. And maybe with some funds covering some shorts, lessening some of that pressure on producers and giving a little rally. Maybe it's an opportunity you mentioned earlier on the wheat side for some folks to price some things out a little bit. But again, I know that supply that is thought to be on farm right now, and a lot of producers behind on their marketing, that's a big piece to this puzzle, Bryan.
It absolutely is, and we have certainly seen that. I mentioned on the wheat side, we have seen producers pricing corn today too. We saw a little bit of that on the early rally yesterday ahead of the report as well. But those producers that are undersold, that don't have maybe enough storage to hold the entire crop, and it is a big crop that is on the way. We've seen them take a little bit of action here, and some of them are even selling corn that they'll store into summer. I mean, with the big carries in corn futures, at least out through May, there is some advantage to hanging on to it. You can more than offset what is high interest at this point by putting your sales out in April, May, June, July, and we've certainly seen that happen here.
Well, I'm thinking about that, taking advantage of the carry in some of these cases. It comes down to, working the pencil, I guess, Bryan, and looking at that risk management and seeing if that makes sense for you. But that speaks to there's some things in the toolbox that producers can use to navigate out of the situation that many folks are kind of stuck in right now.
Yeah, that is absolutely right. And I think this is one of those times where you have to pay particularly close attention to your risk management program and try to find a way to navigate out of what is a really tough spot, because we're going to head into a time frame here, and I know they see it more through the Midwest than we may out here, where it is just going to be difficult to get corn out of the field and off of a truck somewhere. And whether you have to go into a DP program or sell the corn across the scale, whatever, it is tough to navigate. And I'm not sure what the right answer is in all cases, but I do think looking at these carries, if you are in a position to where you can store corn for a while, that certainly makes sense, and maybe softens the blow on stuff that you have to sell on the front end if you're a producer.
With some of those updated USDA numbers too, by the way, from Thursday, national corn yield ticking up to a slightly higher level. I know that was a little surprising, up to 183.6.
Yes.
Maybe disappointed the corn trade a little bit. I mean, what's your perspective on that move from USDA?
I think you touched on it, and the general tone that I hear is yes, everybody is surprised. I think the Illinois yield at 225 was really aggressive in the August report, and I think that the trade generally felt like we would see that Illinois got lowered. What I don't think they did anticipate was the states on surrounding Illinois, and maybe some of the there were states around the Corn Belt. It wasn't just Nebraska, but Iowa, got up a bit, South Dakota a bit, North Dakota, it's Indiana. There was plenty of increases to offset that drop, and I think that was kind of a shocker. The crop obviously didn't finish well in some areas, so early yields still appear to be very, very good, and I think some of these states could still be underestimated. I think we're going to be down the road before we have a real clear answer on where the national yield ends up, but it is going to be a record yield. I don't think there's any doubt about that at this point. It's just how much of a record yield it ends up being. So it's a good point. I just don't think that we've put that situation to bed here yet. And obviously on the demand side, we're probably a little limited. So any increases in yield are going to probably have a profound impact on carry out before it's all said and done.
We're joined today by Bryan Irey with Crossroads Co-op here on Market Talk. Bryan, I should ask as well, you're in a unique position out in the Western Plains, Colorado, Western Nebraska area. Logistics. I know there's been a lot of talk about the water levels on the lower Mississippi River in particular. From your perspective, are you concerned about any sort of logistical issues here as we work through fall harvest from a co-op end user type perspective? Is there anything that's concerning you, catching your eye right now that we need to pay attention to?
At this point, no. Most of our truck moves by grain or rail out here, and I think that you have the usual issues with rail movement. We've certainly seen that in the wheat that we've been trying to ship out of our locations in the western panhandle of Nebraska. A lot of our corn logistics are truck, and we have probably seen truck movement as liquid as it has been in a while. It has, with lower cattle numbers out here, it's been difficult for truckers to stay busy. And heading into the fall, I think there's plenty of them looking for work to try to get caught back up after what has been a slow, very slow summer situation for them. And we'll see how that plays out as we move forward. It is a big crop, as I mentioned out here, like it is through the Corn Belt. So a lot of grain will need to move. But for the moment, it feels pretty good headed into a very busy time of year.
All right. You mentioned cattle, so let's go over to livestock and talk there for a little bit. Kind of a mixed bag to close out the week in the cattle trade. And, this has been an interesting market. I guess I'll open it up to start. I love your perspective on your feeling in this cattle market as we look at futures, look at cash here, working through mid-September, Bryan.
We're starting to see cattle come back into the yards at this point, which is, it's just that time of year where that typically happens. I think in our part of the world, cattle gained well on grass this summer. Some of them may have come in a little earlier than we thought they would, but it's good to see numbers building back up, but they are low at this point in time. It's not unusual out here to talk to feed yards that are 50-60% of capacity. We have some that are probably lower than that, but it's not common whatsoever to find anyone near capacity whatsoever. We have a few yards that have supply agreements with packing plants that we work with that seem to have a little better numbers because they have an obligation to meet there. But the feeder cattle market is still been really kind of up and down. I mean, we're back close to recent highs again, but we're still talking to ranchers and one thing or another who farm and ranch. A lot of them are a little bit miffed by the lower feeder cattle prices at this point, and they still need to move cattle, which is a much better situation for them than moving grain at this point. But I kind of feel like I'm beating around the bush here a little bit, but it has just been very ill-defined on where we go with this thing. I think with feeder cattle prices, numbers in the yards, we still have yards that are very hesitant to put on new crop corn positions because they just don't know what they're going to have for cattle, and it makes it a little ambiguous in terms of how to determine the demand picture.
There's a couple other things too in this cattle market that I'm curious if maybe you saw these or not. I know in terms of the WASDE here this week, I saw some notes on the livestock side that they lowered the cash price for Q4 and Q3 for cattle. I think it was $7 for Q4, $5 for Q3. Wondering if that could have some lasting impact on the market. But another thing too that I saw from DTN, their analyst Shaylee Stewart wrote about this, that there might be some changes coming to daily price limits at the CME for cattle. Something that's waiting to see approval there from the CFTC, but a couple interesting nuggets there to maybe this cattle market has to digest moving forward, depending on how all this shakes out, Bryan.
Yeah, that's a good point. And I had not heard about the increased limits. Are they trying to raise them? Is that
No, they're trying to decrease them. Actually,
Decrease them? Are they?
they're trying to
Yeah.
pull them back in to maybe limit some of the wide swings. It's looking like they're looking at a live cattle daily limit of 650 with expanded limits at 975, and then on feeders, a daily limit would be 825 with an expanded limit of 1225. So basically, looks like they're cutting about $1 off of each limit. So I mean, maybe could help with some of the volatility potentially.
Yeah, I think I would agree with that 100%. And that is probably something that needs to happen. I haven't put much thought into that, or as I mentioned, I hadn't heard about it. But I think getting some volatility out of that market with the risk managers that I have talked with here over the course of the last month or so, that would be an awesome idea. It just feels like the swings have been so wide, the movements are so sharp that I know it makes it very difficult for both the rancher and the feedlot manager alike to manage risk when markets are that way. And there's so much outside money in the markets today that it feels like sometimes the people that use the risk management tools are really not at the forefront, and getting them back there is probably very important at this point in time.
Yeah, no, good thoughts. I will send you a link to that article, by the way, not to catch you off guard.
No, I appreciate that, because that's very good information, and it is something that I need to get caught up on. And I don't, unfortunately, I don't have as much time to follow the cattle market as I used to when I fed cattle, but it is certainly something to keep at the forefront here.
Mm-hmm. Well, I know you do keep a pulse on that cattle market, being out there in the plains, of course, in feedlot country. As we kind of wrap it up here today, Bryan, a few other things I know we haven't touched on, energies or more on the macros or anything like that. But I guess I'll kind of open it to you for final thoughts, whatever direction you want to take us here. Big things you're watching or you want folks to remember as they're looking at their overall marketing plan right now.
Yeah, I think the key is, and we touched on it a little bit in the early part of the conversation, Jesse. I think as a producer, just do not fall in love with these rallies that we're having. They have proved time and time again here over the last 3 or 4 months that they can be very short-lived. And I think depending on what extent funds go to and exiting these markets, if they just exit them, the buying is going to be somewhat limited. If they do decide to get long, you could have a little more of a prolonged rally here, but I just don't understand today where the buying comes from once the funds are out of the way. We have seen good exports up to this point, and I think that to a degree that's going to continue, but we're going to suffer without having China in the corn market, and it just doesn't appear right now that that is going to be a reality. Perhaps that changes after the elections this fall. I don't know how much of China being on the sidelines has to do with the upcoming elections, but they just have generally been trying to avoid buying feed grains at any opportunity, and it still feels to me like they want to be partners with South America, Ukraine, the Ukrainian people, and possibly Russia. And I think we're going to be hard pressed to find additional exports. And we already have them on the books for a significant amount of corn, and I'm not sure they're even going to buy all of that at this point. So again, I think it's nice to see the rallies, but I think you have to keep in mind they are primarily fund driven. And if you don't have those buyers, I'm not sure where we find support in futures at moving forward.
Some excellent thoughts. And yeah, China can be known to make a purchase and then turn around a few months later and cancel said purchase.
Yeah.
I mean, we've seen that time and time again, haven't we, Bryan?
Yeah, it definitely happens, and it happens with regularity. It's been good to have them around the soybean market, but it just doesn't appear that they have an appetite for U.S. corn at this point, which will have an impact on us down the road.
Absolutely. We'll have to see how things shake out as we move forward and work through the fall harvest and more. I appreciate the thoughts and the time with that. Bryan Irey with Crossroads Co-op. Thanks for joining us on Market Talk, and we look forward to having you back on the show again soon.
Thanks for having me.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.